So the new job numbers out this morning for March showed a real solid growth in the United States. 196,000 jobs were added to the economy, and wages continue to soar, especially for blue-collar workers. The unemployment rate held steady at 3.8%, but I will tell you, it was only because 224,000 people left the labor force. The weak February number also revised up from 20,000 to 33,000. President Trump weighed in before he headed to California. Take a listen.
The economic numbers just came out. They're very, very good. Our country's doing unbelievably well economically. We have a lot of very exciting things going on. A lot of companies will be announcing shortly they're moving back into the United States. They're all coming back. They want to be where the action is.
Here now with the reaction, Moody's Managing Director John Lonsky, Laffer Center Senior Fellow Brian Domikovic, and also SureVest CEO Rob Lunar. Let me start with you, John, because I think when President Trump, we know he tends to he's a New York City salesman, so every now and then they hype it up a little bit. But when he said we're doing unbelievably well, I think that is appropriate when you look at how many jobs are being created month over month, how wages are going up at this part of the cycle where it should be done by now.
You're right. You know, if we make it through the month of June, it will be a record-long economic recovery. Never before in U.S. history have we had an economic recovery that lasted 10 years, and we're still creating jobs at a healthy pace. That's tremendous. 3.8% unemployment, and yet inflation risks remain very well contained.
You know, and Brian, that's the thing that really a lot of people cannot understand. Even the Federal Reserve, they can't figure out why they haven't been able to inflate the certain parts of the economy. And why do you think we're still chugging along like this?
Well, we had a great corporate tax cut in 2017. I mean, you take the rate from 35 to 21. Of course, there's going to be tons of new hiring and new corporate initiatives. I found a very interesting part of the jobs report to be an increase in education employment. This means that people are so confident about this economy, they're going to acquire more skills. It's a really positive report.
Rob, the market's taking it in stride, you know, not going crazy per se, but it's hard not to argue from Wall Street's perspective. And, you know, it's an overused cliche, but this is a Goldilocks kind of number, isn't it?
Yeah, that's what we've been saying for a while, Charles. Now, 102 consecutive months of job growth. You know, and the big thing is what we've been hearing from the Fed. They're on the sidelines. We have unemployment at 3.8%. Valuations are good on this market. And look at that 10-year back down to 2.5%. There's really no question why people are rushing back into stocks, Charles.
John, now there were parts of it that bothered me. Probably the people leaving the labor force. How do you reconcile the notion we've got 7.6 million jobs open and 200, almost 250,000 people leave the labor force?
You know, I also noticed in that report, this might be related, there was a drop in the number of people aged 55 and older that were working according to the household survey of employment. And who knows, in part, this might be people
old school
retiring.
attrition.
Right, just saying this is, you know,
that's a big number, though, right?
Yeah, that's a big number, but of course it fluctuates a lot. It's seasonally adjusted, and also brings attention to the fact, and one of your other participants alluded to this, some people just feel they don't have the skills maybe needed for a modern-day economy, and perhaps this reflects some problems with education.
Brian, is there something else that's happening here? I mean, we're celebrating this, and again, I think President Trump, when he says this, we're doing unbelievably well, was spot on. But what else should we be kind of concerned about and focused on here?
There's no question we have to be concerned about labor force participation. It's still down, what, 4 or 5% from its peak in the early 2000s. That's unconscionable in the American economy. Now, look, there's a wealth effect. If baby boomers want to retire early because the stock market's doing great, that's terrific. But we should not kid ourselves that we have to bring a lot more people back into this workforce.
Oh, but that said, if you look at the data, Brian, and I know you do, you know, over the last several years, it hasn't necessarily been the baby boomers, right? Their participation rate, particularly in the early part of the Great Recession, went up, where these working age folks, 25 to 54, that's been a troubled spot.
Yeah, that's what I found interesting about this education figure, because in the Great Recession, lots of people went back to school because there are no jobs. Now there's education employment increases, meaning people want to go back to schools to get skills. It's a more optimistic number than it was, say, in 2009.
Rob, your thoughts on that?
Yeah, I agree. I mean, I think that's exactly what we're seeing right now. Someone was mentioning that there's just a skills gap, and I believe that's true. I mean, the economy's significantly changed from where it was 20 years ago, so that makes a lot of sense, Charles.
It does, but John, I mean, we can't just kind of keep whistling past the graveyard. On the skills gap, these jobs won't stay open forever.
Let's not forget, S&P 500 earnings are going to drop year to year, first time since the second quarter of 2016. I also noticed the prime labor force participation rate of those individuals, I think between 25 and 54 years of age, that was unchanged. So it was probably the older workers that dropped out. Companies are encouraging perhaps some of these older workers to go ahead and retire.
Should companies start investing in retraining their workers?
Save some money and go with the younger workers.
Should these companies be retraining their workers, though? A lot of these companies out there?
They may be forced to do so if they find out that indeed there is a shortage of available labor.
Wages up 3% year over year for the 6th month in a row. 8 months for blue-collar workers. That is phenomenal. That is a renaissance, and that is something we should all cheer. Gentlemen, thank you all very much.